I remember the exact moment someone first explained Bitcoin to me. It was 2013, and a group of young engineers at a tech conference were absolutely convinced they'd figured out the future of money. They showed me the white paper, walked me through the cryptography, explained the blockchain, and I'll admit, the technology was clever. Really clever. The distributed ledger concept, the proof-of-work mechanism. As a computer scientist, I appreciated the elegance of the solution to the double spending problem. But here's what struck me even then. These brilliant engineers could explain how Bitcoin worked in incredible detail. What they couldn't explain was why the world needed it, and that's been my fundamental problem with Bitcoin from day one. Over the past 12 years, I've watched Bitcoin go from a fringe experiment to a $100,000 asset that people are mortgaging their homes to buy. And I've become increasingly convinced that we're watching one of the most destructive financial manias in modern history. I'm not someone who dismisses new technology lightly. I've spent my entire career building and funding innovations. But I've also learned that not every innovation creates value. And just because something is technically sophisticated doesn't mean it solves a real problem. Bitcoin is a perfect example of this disconnect. Let me start with something that might surprise you. I actually think the blockchain technology underlying Bitcoin is interesting. I've funded research into distributed ledger systems. The Gates Foundation has explored how blockchain might help with digital identity in developing countries or supply chain transparency for vaccines. The technology has potential applications. But here's the critical distinction that most people miss. The usefulness of blockchain technology doesn't make Bitcoin valuable. Not even slightly. Let me use an analogy from my own experience. When we were building Microsoft, the underlying technology software, operating systems, programming languages, was fascinating. But that's not what made Microsoft valuable. What made Microsoft valuable was solving real problems for real people. We made computers accessible to businesses and consumers. We created tools that made people more productive. We built an ecosystem that enabled thousands of other companies to create value. The technology was just a means to an end. Bitcoin has it backwards. It's a solution desperately searching for a problem, and after 15 years, it still hasn't found one. I've heard all the arguments for why Bitcoin is supposed to be valuable. Let me address them one by one because I think this is important. If you own Bitcoin or you're thinking about buying it, you deserve to understand what you're actually getting into. The scarcity argument. People love to talk about Bitcoin's fixed supply. Only 21 million will ever exist. This creates scarcity, and scarcity creates value, right? Well, not exactly. Scarcity alone doesn't create value. I could create a digital token right now and limit it to 21 units. Would that make it valuable? Of course not. Scarcity only matters if there's underlying utility or demand based on something real. Let me give you a different perspective on scarcity. When I think about valuable things that are scarce, I think about clean drinking water, vaccines for deadly diseases, teachers in underserved communities, affordable housing in growing cities. These things are scarce, and that scarcity matters because these things fulfill genuine human needs. Bitcoin's scarcity is artificial. It's scarcity by design, not scarcity of something useful. And here's something else that troubles me about the scarcity argument. Even if you accept that digital scarcity has value, why Bitcoin specifically? There are thousands of cryptocurrencies now. Ethereum, Cardano, Solana, many with technical advantages over Bitcoin. Bitcoin processes about 7 transactions per second. Ethereum processes more. Solana claims to process thousands. If the value is in digital scarcity, why wouldn't people switch to a technically superior version? The answer Bitcoin supporters give is network effects and first-mover advantage. But I've watched technology markets long enough to know that first movers often get displaced. MySpace was there before Facebook. Netscape was there before Internet Explorer and Chrome. Nokia dominated mobile phones before the iPhone. Being first doesn't guarantee you win, especially when better technology comes along. The digital gold argument. This is probably the most common justification I hear. Bitcoin is digital gold, a store of value for the digital age. Let me tell you why this comparison bothers me so much. Gold has been valued for thousands of years across every human civilization. It doesn't corrode. It's malleable. It's beautiful. And yes, it has genuine industrial applications in electronics and medicine. I'm not saying gold is a great investment. I think there are much better ways to build wealth, but at least gold's status as a store of value is based on millennia of human behavior and some practical utility. Bitcoin has existed for 15 years. In technology terms, that's a decent track record. In terms of establishing itself as a store of value that will be trusted for generations, that's nothing. We have no idea whether people will care about Bitcoin in 50 years, let alone a century. But here's my bigger issue with the digital gold comparison. Gold's value, while largely psychological, is at least stable. Gold doesn't routinely drop 50% or 70% in value over a few months. Bitcoin has crashed by more than 80% multiple times in its short history. In 2017, it went from $20,000 to $3,000. In 2021, it went from $69,000 to under $16,000. These aren't normal corrections. These are catastrophic losses that wipe out people's life savings. A store of value is supposed to store value. Something that can lose 3/4 of its worth in a matter of months isn't storing value, it's gambling with it. The inflation hedge argument. This one particularly frustrates me because it preys on people's legitimate concerns about their financial security. Yes, governments print money. Yes, inflation erodes purchasing power. These are real issues. But Bitcoin is not the solution. Look at what actually happened during the recent period of high inflation in 2021 and 2022. Consumer prices surged. And what happened to Bitcoin? It crashed from $69,000 to $16,000. If Bitcoin were truly an inflation hedge, it should have gone up when inflation was high. Instead, it collapsed right alongside the stock market. You know what actually holds up during inflation? Real assets. Productive assets. Companies that make things people need can raise their prices to match inflation. Farmland produces food regardless of what happens to currency. Real estate provides housing. These assets have intrinsic value that transcends whatever happens to paper money. Bitcoin produces nothing. It generates no cash flow. It creates no products. It employs no workers. It's purely dependent on someone else being willing to pay more for it tomorrow than you paid today. That's not an inflation hedge. That's speculation. The technology revolution argument. Here's where we get to something I know a lot about. People compare Bitcoin to the early internet. And as someone who lived through the internet revolution, I can tell you the comparison is deeply flawed. Yes, I was skeptical of some internet businesses in the late 1990 seconds. The dot-com bubble was real, and a lot of companies with no viable business models raised absurd amounts of money. But here's the thing. The underlying technology was revolutionary because it solved real problems. Email was better than postal mail for most communications. E-commerce was more convenient than driving to stores. Search engines helped people find information faster than going to libraries. The internet created genuine utility. What problem does Bitcoin solve? I mean really, concretely, for average people. Sending money across borders? Traditional payment systems can do that. The Gates Foundation transfers money internationally all the time. Yes, there are fees, but they're often lower than Bitcoin transaction fees during busy periods. And traditional systems don't require the recipient to understand cryptographic keys or worry about losing their password and losing everything. Banking the unbanked? This sounds noble, but let's be honest. Most unbanked people in developing countries don't have reliable internet access or smartphones capable of managing Bitcoin wallets. You know what actually helps the unbanked? Mobile money systems like M-Pesa in Kenya, which runs on simple cell phones and is backed by real financial infrastructure. That's reached tens of millions of people and actually improved their lives. Privacy? Bitcoin transactions are literally recorded on a public blockchain forever. It's pseudonymous, not anonymous. Law enforcement has gotten quite good at tracing Bitcoin transactions. If you want financial privacy, Bitcoin is actually a terrible choice. Protection from government overreach? Maybe if you're in a country with a collapsing currency. But that's a tiny fraction of humanity, and even then, Bitcoin's volatility often makes it worse than holding a shaky local currency. I've spent a lot of time thinking about how technology can improve lives. The Gates Foundation has invested billions in innovations that help people. Better vaccines, improved sanitation, disease eradication, educational tools. These technologies create measurable improvements in human welfare. Bitcoin, after 15 years, hasn't solved any significant problem for regular people. It's become a speculative asset that enriches early adopters while exposing late adopters to catastrophic risk. The environmental disaster. Now let me talk about something that truly concerns me. Bitcoin's environmental impact. This is an issue that doesn't get enough attention, but it's absolutely critical. Bitcoin mining currently consumes around 150 terawatt-hours of electricity per year. That's more than the entire country of Argentina. More than all of Google, Apple, Microsoft, and Amazon's data centers combined. And what do we get for that massive energy consumption? About 7 transactions per second globally. Let me put that in perspective. A single Bitcoin transaction uses roughly as much electricity as an average American household consumes in a month. One transaction. Meanwhile, Visa can process tens of thousands of transactions with a fraction of that energy. This isn't just about efficiency, this is about climate change. We're in a race to decarbonize our economy, to move away from fossil fuels, to prevent catastrophic warming. And Bitcoin is moving us in the opposite direction. In Kazakhstan, Bitcoin miners are literally reopening coal plants that had been shut down. In the United States, gas plants that were being retired are staying online to power mining operations. The standard response I hear is that Bitcoin mining increasingly uses renewable energy. But that's a misleading argument. If Bitcoin miners use solar or wind power, that's renewable energy that could have gone to replacing fossil fuel electricity elsewhere in the grid. It's opportunity cost. Every megawatt-hour used for Bitcoin mining is a megawatt-hour that can't be used to power hospitals, schools, or homes. As someone who's spent years working on climate solutions and funding renewable energy projects, I find Bitcoin's energy consumption morally inexcusable. We're in a climate crisis, and Bitcoin is burning massive amounts of energy to facilitate speculation. The institutional adoption myth. Bitcoin supporters love to point out that institutions are now buying Bitcoin. BlackRock offers Bitcoin ETFs. Companies like MicroStrategy have put billions into it. Surely, they say, these sophisticated investors wouldn't be involved if it weren't legitimate. I've watched this movie before. Institutions don't make things legitimate. They just make bubbles bigger and more destructive. In 2008, the smartest people on Wall Street PhDs in mathematics, sophisticated risk models, billions in capital convinced themselves that housing prices couldn't fall nationwide. They built elaborate financial instruments based on that assumption. Rating agencies blessed it all, and when reality hit, it nearly took down the entire global financial system. Institutional involvement doesn't mean something is safe or sensible. It often just means that institutions have figured out how to make money from something while offloading the risk to regular people. BlackRock offering Bitcoin ETFs doesn't validate Bitcoin. It validates that BlackRock can charge management fees on a popular speculative asset. MicroStrategy's Bitcoin strategy isn't a vote of confidence in the technology. It's one CEO's personal conviction overriding corporate prudence. These institutions aren't guaranteeing Bitcoin's value. They're just giving more people easier ways to gamble. My view on how this ends. I've been thinking a lot about what happens next. Not because I spend my time worrying about Bitcoin specifically, but because I worry about the millions of people who are being hurt by this mania. Here's what I expect. Bitcoin isn't going to go to zero overnight. Bubbles rarely pop that cleanly. What's more likely is a long, grinding decline punctuated by occasional surges that give people false hope. We'll see Bitcoin drop 60%, rally 30%, drop another 50%, rally 20%. Each rally will convince some people that the bull market is back, but the overall trajectory will be down as reality gradually sets in. What reality? That Bitcoin doesn't do anything useful, that the technology is inefficient. that governments aren't going to let an unregulated, energy-intensive speculative asset undermine their monetary systems. That newer technologies are better suited for any legitimate use case blockchain might have. The regulatory pressure is already building. The European Union is implementing strict cryptocurrency regulations. The United States is getting more serious about oversight. China has essentially banned it. As governments crack down not out of fear, but out of responsibility to protect consumers and maintain financial stability, Bitcoin's utility will shrink even further. And here's the thing that Bitcoin supporters don't want to acknowledge. Every government on Earth has an incentive to see Bitcoin fail. Not because they're threatened by it, but because Bitcoin creates problems without solving any. It facilitates tax evasion, money laundering, and ransomware payments. It consumes massive energy during a climate crisis. It enables gambling addiction dressed up as investing. What government is going to champion that? Some people tell me that Bitcoin is inevitable, that governments can't stop it, but that's naive. Governments have tremendous power over financial systems. They can make it illegal for banks to handle Bitcoin transactions. They can tax gains at confiscatory rates. They can ban exchanges. They won't ban Bitcoin entirely. That might create sympathy for it. They'll just make it sufficiently inconvenient and unprofitable that most people lose interest. The human cost. But my real concern isn't about the price of Bitcoin or who wins or loses on their trades. My concern is about the people being hurt right now. I hear stories regularly. A teacher who put her entire retirement savings into Bitcoin at $60,000 and is terrified to sell at a loss. A young couple who took out a second mortgage to buy cryptocurrency and now can't make their payments. A college student who dropped out to trade Bitcoin full-time and has lost everything. These aren't greedy people trying to get rich quick, though some are. Many are just scared people who've been told that traditional savings don't work anymore, that inflation is destroying their future, that Bitcoin is their only hope. They've been sold a lie by people who got in early and want to find someone to sell to at higher prices. I think about this through the lens of my work in global health and development. When we invest in a new vaccine or agricultural technology, we ask, who benefits? Does this create value for the people who need it most? Does it solve a real problem? Bitcoin fails every one of those tests. It benefits people who bought early at the expense of people who buy late. It creates no value, just transfers wealth from the hopeful to the cynical. And it solves no real problem for the vast majority of humanity. What you should do instead. If you're holding Bitcoin right now, I'm not going to tell you to panic and sell immediately. That's not responsible advice either. But I would encourage you to ask yourself some hard questions. Do you actually understand what you own? Not the marketing slogans, but the actual technology and economics? Could you explain to a friend exactly why Bitcoin has value beyond number go up? If Bitcoin dropped 50% tomorrow and stayed there for 5 years, would you be okay? Is this money you can truly afford to lose? Are you checking prices constantly? Are you making decisions based on fear of missing out or fear of losing what you have? That's not investing, that's gambling affecting your mental health. What else could you do with this money? Could you pay down debt? Build an emergency fund? Invest in your education or skills? Buy into a diversified portfolio of companies that actually produce things? I've spent my career building technology companies and now work on solving global challenges. The things I find valuable, the things I put my time and money into, are things that make the world better. Companies that create products people need. Research that cures diseases. Technologies that help farmers grow more food with less water. Systems that deliver education to children who don't have schools. These things create real value. They make people's lives better. And over time, that real value creation generates returns for investors while also benefiting society. Bitcoin creates no value. It makes no one's life better except through the hope of selling it to someone else for more money. That's not innovation. That's a pyramid scheme with better marketing. The blockchain revolution that isn't. Let me be clear about something. I'm not opposed to digital currencies or blockchain technology in principle. The Gates Foundation has explored how distributed ledger technology might help with supply chain transparency or digital identity systems. Central banks around the world are developing digital currencies that could make payment systems more efficient. But these use cases don't need Bitcoin. They need blockchain technology, which is separate from Bitcoin itself. It's like saying you need to invest in a specific encyclopedia company to benefit from the invention of paper. The technology and the speculative asset are different things. Real innovations in digital payments are happening, but they're coming from traditional finance and technology companies using modern infrastructure. Mobile payments, instant transfers, digital wallets. These are improving our financial system incrementally, which is how real progress usually happens. Bitcoin offers none of these advantages and introduces massive new problems. A technology person's perspective. People sometimes assume that because I'm a technology person, I should be enthusiastic about Bitcoin. But being a technology person means understanding not just what's technically possible, but what's practically useful. When we designed MS-DOS and then Windows, we weren't trying to create the most technically elegant operating system. We were trying to create something that real people could actually use to get work done. That required trade-offs, compromises, practical thinking. Bitcoin represents the opposite approach. It's technically clever but practically useless for most people. The complexity is a feature to its supporters. It makes it seem sophisticated and exclusive. But that complexity is actually a fatal flaw. Real innovations get simpler over time, not more complex. The iPhone made smartphones accessible to everyone. Bitcoin, after 15 years, is still too complicated for most people to use safely. I know how to evaluate technologies. I ask, does this solve a real problem? Is it better than existing solutions? Can normal people use it? Does it scale? Is it sustainable? Bitcoin fails almost every one of these tests. The opportunity cost. Here's something that keeps me up at night. While millions of people are gambling on Bitcoin, they're missing out on real opportunities. The money going into Bitcoin could be invested in companies developing clean energy solutions, working on medical breakthroughs, building infrastructure, creating technologies that actually help people. Instead, it's being poured into a speculative asset that produces nothing. The human talent going into Bitcoin mining and cryptocurrency trading could be solving actual problems. Smart engineers could be working on climate solutions, disease eradication, educational technology. Instead, they're optimizing mining algorithms and building trading bots. The attention and excitement around Bitcoin could be directed toward real innovations. When young people get excited about technology, I want them excited about building things that matter, not gambling on digital tokens. This is the real tragedy of Bitcoin. It's not just that people might lose money. It's that we're wasting time, energy, attention, and resources on something fundamentally unproductive during a period when humanity faces enormous challenges that technology could help solve. Why I'm speaking out. I don't usually spend time criticizing specific investments or technologies. I generally believe in focusing on positive solutions rather than problems. But I'm speaking out about Bitcoin for several reasons. First, I genuinely worry about the millions of people being hurt by this speculation. When the bubble fully deflates, and it will, regular people will lose their savings while early adopters and exchanges cash out. That's unjust. Second, Bitcoin is consuming massive amounts of energy during a climate crisis. This isn't just financially destructive, it's environmentally destructive. We need every kilowatt hour of clean energy for productive uses, not speculation. Third, Bitcoin is distracting us from real innovations in financial technology. There are genuine opportunities to improve payment systems, reduce transaction costs, and increase financial inclusion. Bitcoin isn't one of them, but it's sucking up attention and resources that could go toward real solutions. Fourth, I think people deserve honest information. The cryptocurrency industry spends enormous amounts on marketing, influencers, and lobbying. Someone needs to provide a counterpoint based on logic and evidence rather than hype. What real innovation looks like. Let me paint a different picture. Real innovation in financial technology looks like mobile payment systems that let people in developing countries transfer money safely using basic cell phones. It looks like blockchain technology being used to track vaccine distribution and ensure authenticity. It looks like digital identity systems that help refugees prove who they are without physical documents. These innovations solve real problems. They help real people. They create measurable improvements in human welfare. And importantly, they don't require massive energy consumption or speculation. The technology underlying Bitcoin might contribute to some of these solutions, but Bitcoin itself, the asset, the speculative token, adds nothing of value. Investing in Bitcoin doesn't support any of these positive uses of blockchain. It just makes you part of a speculative cycle. My final thoughts. I've been fortunate to witness and participate in several technology revolutions during my lifetime. I saw personal computers go from hobbyist toys to essential tools. I watched the internet transform how we communicate and access information. I'm now seeing artificial intelligence begin to reshape entire industries. These revolutions had something in common. They solved problems. They made people more productive. They created tools that improved lives. Yes, they also made early investors wealthy. But that wealth creation was a byproduct of genuine value creation. Bitcoin is different. It's not creating value, it's transferring it from late adopters to early adopters. It's not solving problems, it's creating new ones. It's not making the world better, it's consuming resources that could go toward actual solutions. When I look at my own portfolio and the Gates Foundation's investments, everything we hold is there because it creates value. Microsoft created software that made computers useful. Companies in our portfolio are developing medical treatments, clean energy, educational tools, agricultural innovations. These investments help people while also generating returns. Bitcoin helps no one except those trying to sell it to the next buyer at a higher price. I know this perspective isn't popular among cryptocurrency enthusiasts. I know some people have made a lot of money on Bitcoin and see me as out of touch or biased toward traditional finance. But I'm not speaking from bias. I'm speaking from decades of experience evaluating technologies and investments. I've seen real innovations succeed and create lasting value. I've seen hype cycles come and go. I've watched bubbles inflate and pop. And I can tell you with confidence, Bitcoin has all the characteristics of a bubble, none of the characteristics of a genuine innovation, and is heading for a collapse that will hurt millions of people. If you own Bitcoin, I encourage you to think carefully about why. If your reason is because the price went up, or because everyone's buying it, or because it might go to 1 million, those aren't investment theses. Those are gambling rationalizations. If you're thinking about buying Bitcoin, I encourage you to ask what problem it solves for you personally. Not in theory, not according to marketing materials, but in reality. Can you answer that question clearly? And if you've avoided Bitcoin so far despite the social pressure and fear of missing out, I want you to know you've made the right choice. You've avoided a speculative mania that has enriched early adopters while setting up millions of others for losses. You've kept your wealth in productive assets that create value rather than gambling on digital tokens. The Bitcoin story isn't over yet. The price might go higher before it eventually collapses. Some people will get lucky and time their exits perfectly. But the vast majority, the teachers and nurses and truck drivers who bought Bitcoin hoping to secure their financial future, they're going to lose. And that's why I'm speaking out. Not because I want to be proven right, not because I have some competitive interest in Bitcoin failing, but because I've spent my life trying to solve problems and help people, and I see Bitcoin hurting people while solving nothing. The collapse is coming. The only question is when, and how many people will be hurt when it does. I hope this warning reaches you in time. Think carefully, ask hard questions. And remember, real innovation solves problems. Bitcoin creates them.